Hi students, you were provided with a sample statement of cash flows. Let's go through the individual cells in Excel as well as the purpose of the statement of cash flows. So you may be wondering, how is the statement of cash flows used? The statement of cash flows shows how money moves in and out of a business. It helps businesses track where their cash comes from, which is a cash inflow, and where it's spent, which is a cash outflow. We'll cover that a little bit more in detail in a minute. Investors and managers use the statement of cash flows to understand if a company has enough cash to pay bills, invest in its own growth, and stay financially healthy. So I mentioned cash inflows. These are cash that's coming into the business from various sources. Some examples are revenue from sales, investments received, loans, or asset sales. Cash inflows increase the company's cash balance and are essential for covering the company's expenses and for growth. Cash outflows, on the other hand, means cash leaving the business, and we typically have those outflows because we're paying for expenses, investments, and other obligations. Some examples of those are salaries, rent, loan repayments, and equipment purchases. Cash outflows reduce the company's cash account balance and need to be managed to maintain financial stability. All right, let's jump into the statement of cash flows. So if we start at the top with cell A1, this is the company name, Treasure Trail Trading Company. Moving down to cell A2, this is the name of the financial statement. And again, the financial statement we are reviewing is the statement of cash flows. In the third row, looking at cell A3, this tells us the date of the financial statement. This particular statement of cash flows is showing us the company's cash flows for the year of January 1st, 2024 to December 31st, 2024. Moving into the information on the actual statement, cell A4 is a heading, cash flows from operating activities, indirect method. So this operating activity section shows cash inflows and outflows related to the company's core business operations. Some examples are revenue from sales, payments to suppliers, wages, and taxes. So this operating activity section reflects how much cash is generated from the company's day-to-day activities. I mentioned the indirect method. So the indirect method is a way of calculating the cash flows from operating activities. It starts with the net income and adjusts for non-cash items and changes in working capital to show cash flows from operating activities. It's used by the majority of companies because it links cash flows to the income statement and the balance sheet. The other biggest reason is it's easier to prepare, especially for a larger company, compared to the direct method. So if you tab through the cells underneath, you will see the net income for the company as well as those adjustments that I mentioned. And if we go all the way down to cell C14, we see the amount of $74,925. This is labeled as the net cash provided by operating activities. So what this is telling us is that the company had a net cash inflow of $74,925 from its operating or day-to-day activities. Right, moving down to our next heading, which is on cell A15, it says cash flows from investing activities. This section tracks cash transactions related to the purchase and sale of long-term assets. So some examples of those long-term assets are equipment, land, and investments. This section helps assess how a company is using its cash for its own growth and expansion. So if we look under that, the next couple rows, we see some examples of cash activity for investing. And if we go to cell C18, This tells us that the net cash used by investing activities was $26,000. You'll notice it's a negative $26,000 because that indicates a cash outflow. So the company had a net cash outflow of $26,000 from its investing activities. Moving along to our next section, if we look at cell A19, our header says cash flows from financing activities. This section includes cash movements related to borrowing, repaying debt, issuing stock, and paying dividends. It reflects how a company funds its operations and growth through investors and lenders. So the next couple cells have some examples of cash paid and received for those financing activities. And then if we move to cell C23, we have a negative number again, negative $36,000, and this is the net cash used by financing activities. So this tells us that the company had a net cash outflow of $36,000 from financing activities. If we move down to the next row, we see our net increase in cash. So specifically, cell C24 has a dollar amount of $12,925. This is the total impact of operating, investing, and financing activities on the company's cash balance during the period. So this is the total increase in cash for the year 2024 for this particular company. It's positive, which means we have a net increase, which means our inflows were higher than our outflows. If we move to cell C25, we see we have $5,995. This is the prior year ending balance, also known as the current year beginning balance of our cash account. And we add that to the net increase or decrease in cash. So we're going to add that to the $12,925 from cell C24, and we get a total of $18,920 as seen in cell C26. So this is our ending cash balance for the current year. And this is the point where we tie it out to our balance sheet. So the ending cash balance here on cell C26 on the statement of cash flows should match the current year cash account balance on our balance sheet. Thank you for taking the time to review your statement of cash flows. Example, if you have any questions, please reach out to your instructor and we'll be happy to help. Thank you.